One of the biggest hidden opportunities I see with high net worth families is freeing up cash flow. Even for families with 7, 8, 9 figures, I see the same thing: wasted money hiding in plain sight. And when we fix it, the results are life changing. Because here's the truth: you can't build freedom if your cash is leaking out the back door. Let's start with something I call a lifestyle creep trap. I've seen it hundreds of times. Income goes up and quickly spending follows. A slightly nicer vacation, an upgraded SUV, an extra subscription or two. It feels harmless until one day you look up and you realize your lifestyle is silently eating away at your future freedom. Lifestyle creep is one of the biggest enemies of early retirement. And it's not about living cheap, it's about aligning your spending with what actually matters. At GDS, we always tell clients you can have anything you want, just not everything you want. One of my clients, a business owner, recently trimmed $4,000 a month in invisible spending. They didn't downsize their home, they didn't give up what they loved, they just removed what wasn't adding value to their lives. That's $48,000 a year redirected to their investment plan. 5 years from now, that's hundreds of thousands of dollars, all from decisions that didn't change your happiness one bit. Think of lifestyle creep like sand in your gas tank. It slows your freedom engine down quietly and consistently. Millionaires think in terms of cash flow, not income. You can make $500,000 a year, but if you're spending $480,000, you're not wealthy, you're trapped. People who retire early treat their households like a business. They think in terms of profit margins, not paychecks. Every quarter, they review what's coming in and they review what's going out. And what's left is there for investing. Here's a mindset shift. Your savings rate is your freedom rate. Think about that. The higher it is, the faster you buy back your time. Let's break down the numbers. A $100,000 investment today, growing at 10% annually, would be worth over $250,000 in 10 years. It would be worth over $650,000 over 20 years, and over $1.7 million after 30 years. That's the power of compounded freedom. So the next time you look at your budget, ask yourself, how much of my income is working for me and how much is being spent? Now let's talk about the silent wealth killer, taxes. For high income earners, taxes often cost more than their mortgage or cars and their kids combined. And the difference between a decent retirement plan and a great one, it's not returns, it's tax strategy. There are 3 strategies I want you to think about: Roth conversions, tax loss harvesting, and qualified charitable distributions, also known as QCDs. Let's start with the Roth conversions. When the markets are down, converting traditional IRA funds to a Roth IRA can be super powerful. You're paying taxes on a lower account value, and all the recovery that follows happens tax-free. You're essentially trading taxes on a dip for tax-free growth on the comeback. Think of it this way: when the markets are down, your account value is temporarily lower, which means you can convert these dollars to a Roth while paying taxes on a smaller amount. Then as the market recovers, all that growth happens inside the Roth, completely tax-free. So you're not just surviving the downturn, you're turning it into an opportunity. You're paying taxes on the dip and enjoying tax-free growth on the comeback. Second, tax loss harvesting. When markets dip, you can sell investments at a loss to offset capital gains and lower your tax bill. You can reinvest in similar assets to stay in the market, or rebuy after 31 days to avoid the wash sale rule. It's like turning lemons into tax lemonade. And finally, qualified charitable distributions. If you're taking RMDs, required minimum distributions, from a traditional IRA, you can donate up to $100,000 directly to a qualified charity, and it satisfies your RMD and keeps that amount out of your taxable income. It's amazing. That can lower your AGI and even reduce Social Security on Medicare premiums. On a quick note, RMDs generally start at 73 years old or 75 if you were born in 1960 or later. Each of these tax strategies can save tens of thousands of dollars a year, and every dollar saved in taxes is a dollar that keeps compounding towards your freedom. Once you've cut the waste and optimized your taxes, it's time to build your freedom engine. This is a system of investments that grows and generates income without relying on your labor. It could be a mix of stocks, bonds, real estate, CDs, whatever fits your goals and your risk tolerance. The key is pretty simple. Your money should be working at least as hard as you are. One of my favorite client stories is a couple in their 50s redirected about $5,000 a month from overspending into a disciplined investment plan. In about 10 years, they bought themselves an extra decade of freedom. You don't need perfection. You just need consistent direction. Think of it like a flywheel. It takes effort to start, but once it's spinning, it builds unstoppable momentum. So here's your takeaway. You don't have to overhaul your life to retire faster. You just have to stop leaking wealth. Audit your lifestyle, optimize your taxes, and lastly, channel that freed up cash into your freedom engine. Your action step for this week is the following. Review the last 90 days of expenses. Highlight every charge that didn't add meaning or joy in your life, and redirect that total towards your investment account this month. I promise that one move can shift your trajectory. Thanks for listening. If this episode got you thinking about your cash flow, hit subscribe and share it with someone who's serious about their next chapter. And if you'd like help running your own freedom audit, visit gdswealth.com. I'm Glen Smith. Remember, financial freedom isn't about having more. It's about needing less and owning your own time.